Welcome to the future of money. Come with us on this journey into the world of Bitcoin, blockchain and crypto projects. You're going to meet the trailblazers. These people have changed my life and they may very well do the same for you. Very pleased to welcome somebody that I've followed for a number of years, Giacomo Zucco. Welcome along.
Thank you, thank you.
My co-host, Lawrence Grinceri. Thank you for joining us again, sir.
Hi, good to join you, Sean. Good to meet you, Giacomo.
And obviously, you know, everything you're talking about here and really understanding the bigger macroeconomic picture of Bitcoin has been what's fascinated me and really kept me in the space. What do you, obviously you consult to that at an institutional level. I know you're a great educator for the general public at a retail level. I'd love to talk to the two of you guys. Obviously, Lawrence, you're building infrastructure to there's wealth management platforms that you're extending now into the digital asset space. Briefly, Giacomo, what are you seeing at an institutional level? Fidelity have obviously put out a report recently that showed huge interest and adoption. Is that what you're seeing on a practical level?
Yeah, I do. There is some biographic note that makes it a little bit harder for me to be a very accurate observer now, because in the last 2 years, I had a daughter. So I'm trying to reduce my institutional consulting more and more and to increase my retail or freelance activity. But I didn't succeed into relocating. So I still do at least half of my week. Today I'm in Switzerland and I was this morning with a banker, basically. So I still have a contact. So what I'm seeing is I will, if I had to simplify narrative, I will go like this. At the beginning, it was a matter of pushing. So the bank, the Swiss bank, my typical client, they have some clients, some customers. They wanted to invest in Bitcoin. The bank was skeptical. It was absolutely conservative. What is this stuff? They hired me to help them understanding what was happening, and they were like, I was gently pushing them to open their mind to this new asset class and this new perspective. Basically, what I did was explaining that Bitcoin is mostly in most time frames a not correlated asset with other asset class, and that's good for a portfolio risk management. Either it goes down or up. The point that if you have non-correlation, that's good for your portfolio. So the first phase, I would say 2015, 2016, 2014 was a pushing phase. They were resisting. There was a lot of skepticism. Then started the phase of overconfidence. So when the ICO craze started, and when basically even super institutional guys in Zurich, they it was like a pendulum. They moved from nothing, this stuff is not possible, to, oh, I was wrong. This is possible. So everything must be possible. So now please help me with Bitcoin, but also with ICOs and stable tokens and define every kind of bullshit that is going around. The cousin of my hairdresser said to me that there is a new token and I want that. So, and this was maybe a serious guy, a serious banker of 70 years with his ties and jacket. And he was just listening to every kind of gossip, and they wanted to invest in everything. So there was skepticism, and then the pendulum went to craziness and exuberance. After the collapse of the ICO bubble, the first collapse, I think that is not done yet with collapsing, but after the first partial collapse of the ICO bubble, I think the pendulum is a little bit more in the center right now. But what is different is that for the first time, the decisions and the interest is not guided, and we go back to the beginning of our conversation. Now the interest is partially guided by fear and not only by greed. So at the beginning, it was like, I may be interested about this, but so I may be greedy, but I'm scared of Bitcoin. Yeah. Then it was, I'm so greedy that I'm not scared of Bitcoin, nor I'm scared of every kind of bullshit. I want everything, FOMO. And now is, okay, I partially understand Bitcoin. I'm still a little bit cautious. I understand now that ICOs are mostly bullshit. But now the reason I'm interested is because I don't trust the fiat system anymore. So
yeah.
1 year ago, my point about Bitcoin was having more profit, having more risk balance in my portfolio, having more decorrelation. I wanted more. So fiat system is working, but I want more. In this case, is like, I'm really not sure anymore that what I assume as normal will stay the same. I mean, I've seen the whole world going into, the whole world population put into home arrest in the turn of 1 month. I'm seeing the level of unemployment that are actually worse than the 30 recession. So we are seeing something that is unprecedented, and the Federal Reserve is printing a lot of money, and they're not even printing. So now they're just printing reserve. So I'm not going into details, but it's a little bit more complicated than the way I represented the Federal Reserve is not printing money and handing it out to people. Yeah. They're printing money as a reserve, allowing commercial banks to increase the secondary, the M2, the secondary money supply, on top of the reserve that the central bank increased. So there is like a layer situation, and they are already talking about increasing not only the reserve, but also basically to print money more directly. And also the reserve requirement to American banks, they went for the first time in human history to zero for a while. So for a while you could, when you lend out 100, you are required to keep at least 30%, 3%, 2%. There is a percentage you have to keep in reserve in order not to multiply your exposition infinitely. And in the USA, for a while, for the first time in history, the reserve obligation went to zero. It was a temporary measure, whatever, but these are unprecedented times. And so when I talk with people, even if they're very conservative, they are not crazy anarchists like me, they are not futurist cypherpunks, they're just quiet business guys, but they are now not only seduced by the idea of something new, they're actually for the first time scared of the resilience of what is old and known.
Yeah, people tend to react more dramatically and swiftly out of fear more than anything else, in my opinion. Laura, any comments around what you're seeing at an institutional level and maybe the change in thinking around?
Yeah, no, you're definitely seeing. I think Fidelity came out for survey quite recently. I think over a quarter of their clients. I mean, Fidelity's client base in terms of AUM is somewhere in the vicinity of about 7 trillion. So we are talking about a decent piece of the global economy. And they're saying about 25% of their clients are investing in Bitcoin. I see it as sort of Giacomo's point. It's a hedge. They're sort of positioning themselves in the event. Right now, I think the economy is sort of, everyone's leaning towards 3 assets, gold, US dollars, and Bitcoin, as a hedge against sort of a meltdown. The US dollar, however, in the meltdown scenario would go up until a certain point where there's a global carry trade going on against the US dollar. So all the loans out there are USD denominated. Eventually, as the US dollar strengthens, it will get to a point where a lot of the foreign, the loans taken out and are being paid back in foreign currencies will become more and more expensive to meet those obligations. And then eventually they'll just stop paying and they'll default. Something similar happened in 1997 in the Asian markets. At that point, the carry trade was against the Japanese yen. And it was the whole reason around what they called the Asian meltdown. I think we're in the midst of a global version of that. And in that scenario, then I think, gold and precious metals will continue to rise. And I could see Bitcoin actually doing quite well in that environment. I don't see Bitcoin as sort of the underpinning of a monetary system as such. I see it more as a sort of I don't like using the word, but for lack of a better description, digital gold. And, it will be an asset that is sort of our first, example of a digital product that has become an asset, not too dissimilar to, back in the 90s when we started doing websites and they became quite valuable. They're seen as, in some respects, cyber real estate. Out of nothing, so all of a sudden there's something that now has value, and now people talked about websites and there's stickiness and people coming to those sites and being able to transact. It created literally new real estate in a digital landscape. Bitcoin is the equivalent of that, except in the monetary landscape. I think as the blockchain proliferates, there will be more, hopefully the ICO market will eventually become a more regulated sort of a marketplace where, unlike the stock exchange, it will be easier and cheaper, but still, you will be protected, being able to, issue securities to be able to raise capital. And that's going to, I think, hopefully lead the return of what we're going into over the next few years in terms of how do you recover an economy which is going to need to go through a massive restructuring. And as part of that, you're going to have a lot of structured finance, which will ultimately result in investment products being issued that, brings, takes money out of savings where it's dormant, and gets it now back into the economy to sort of re-stimulate and be able to drive economic growth by being able to get economic capital to go into those areas where it will have the greatest use in being able to re-stimulate the global economy.
Yeah, so Giacomo, where do you think Bitcoin currently is at? I mean, obviously I've heard you talk in terms of, it needs to be a store of value before it can be a medium of exchange. Where is Bitcoin? I mean, nowadays, I think everyone has heard of it. You've been educating people for what, 8 years now. We've just seen dramatic changes in the last 6 months with COVID, with the financial situation. Do you think there is going to be a huge uptake and adoption of this asset, this digital gold as it currently is? I mean, for me, it's very much a speculative store of value at this point. What do you see the big plays being over the coming months? Maybe from an institutional point of view first, could you maybe comment on that?
So I try to first justify this because it seems clear, but it's actually kind of controversial still about store of value being necessary as a characteristic before something can become a medium of exchange. So store of value means that you can, well, it's self-explanatory. You can store your value there. And a medium of exchange, most people think that medium of exchange just means that you can exchange it for something else. That's not a medium of exchange. A real estate is in some circumstances a store of value. So some people, some families can say, okay, we have this value. We want to not just to multiply it, but even just to save it from inflation or whatever. We buy some real estate and we just park the resources there, and then eventually we will sell. So a real estate can be exchanged because you can sell it for something else. So it is exchangeable, but it is not a medium of exchange. The medium of exchange is when basically you have one guy who wants to give some resources away and one guy that wants to receive that resources, but he wants to give away something else. So their needs, they don't match temporarily because maybe, so for example, the example before, I have fish and Lawrence has water, but right now I don't need water, and right now he doesn't need fish. So eventually he will, and right now I will need water, but not now. So there is a time mismatch of needs, and also sometimes a place mismatch or a scale mismatch. And so the reason you want the medium of exchange is that it's a deferred exchange. So I will give you, Lawrence, my fish, but in exchange, I don't want water. I want something that it is the most desired, the most practical to exchange, the most desired good in the economy right now. So I will keep that, and I will exchange that with something I really need, which is not fish right now. So you take the water and you give me this stuff, which is money. And then when you want to sell again the water, you will get money. And when or you will use money to buy fish when you need, and I will use money to buy water when I need. So there is a mismatch. So store of value is something that stores value. But medium of exchange is also something that stores value for a while, because you exchange a good, in exchange you get this temporary intermediate good, and you have to store this temporary good for a while, and then you will spend it again to buy something else. So any medium of exchange is actually the third good between an exchange of two different goods that can bridge the time of exchange from point A to point B. So any medium of exchange must be, at least for a reasonable time frame, also a store of value. So you cannot have something that cannot store value and use it as a medium of exchange, because the selling party will have to receive it and store it before they can use it to acquire something else. So that's the nature of money. So this is the reason I think the store of value function takes a lot of time to build, and then the medium of exchange can build on top of that. Of course, it's not like a two-step process in which first you get perfect store of value, and then you get perfect medium of exchange. You have a hybrid process in which you have basically a continuous loop. And Bitcoin right now, I will argue, is a very, very good is a very, very good store of value. This may seem controversial, especially because it can still go down like 50% in a matter of a few days, like after the COVID panic. But I will argue that the point is that if you want to store your value, what you want is to minimize some costs. And these costs are not just one, there are several. One cost is, for example, physical deterioration of your store of value. So if you store value in sushi, that's a very bad idea, because after one day it will go bad. So there's the physical deterioration. Then there is the resistance to confiscation. So basically, the fact that if you store value into gold in the middle of a street with very small coins in a trafficked street, that everybody will basically steal it. So it's a very loosey store of value. If you store value in a safe hidden beneath the mountain, that's a very good store of value, because your cost of confiscation risk is very low. And then there is a supply shock cost. So you are storing value into some good, but then the typical producers of this good will inflate the good, producing a lot of it, and so the value will go down because of oversupply, and that's another risk. And then there is a demand risk, the demand shock risk. So people will just stop wanting that kind of good, or they will want it, but not as bad as now. So you are risking that. So of all this spectrum of possibility, I would say that Bitcoin is very, very good in the first. The cost of physical deterioration of your Bitcoin is negligible, because it doesn't deteriorate, unlike sushi. It's closer to physical gold. It's better than cash, that fiat cash, because if you think about narcos in Mexico, Escobar, he had a lot of physical cash in United States dollars, and he had to basically put it underground, and then there were animals costing him 20 or 30% of his value, because they were eating up the cash, like insects and small organisms and stuff like that. So compared to physical cash, Bitcoin is very good in storing value against physical deterioration. Bitcoin is very good, very, very good if you use it correctly, storing your value against confiscation. Having your bank account confiscated, especially in politically complex times like this, is kind of likely. And having your Bitcoin confiscated, if they won't confiscate my bank account, they only have to make a phone call to my bank. If they want to confiscate my Bitcoin, assuming I have any, because officially I have 0 Bitcoin, and I don't remember if I have some or not, they have to literally torture me. That's not to say that governments cannot torture people in order to confiscate stuff, or random extortionists, random kidnappers. They can torture you or blackmail you, but they have to make the effort, which is very expensive to do in a systemic way. I mean, if you want to confiscate everything around, if you just have to call a bank, that's easy. If you have to torture individually every single individual, and even there, you don't know if he's telling the truth about all the private keys that he has. So Bitcoin is great against confiscation. Bitcoin is also great, way better than, so it's better than fiat money. Bitcoin is better than fiat money about supply shock risk. So there is the risk that the Federal Reserve or the European Central Bank or whatever, the Australian Central Bank, they will just flood the market with new money. That's a political possibility. And over a certain long enough time frame, it's quite close to a certainty. But in the short time frame, it's a possibility. It's very unlikely that Bitcoin will ever change the supply rate. And if you study the game theory of the system, it's close to impossible that it will ever change the supply rate. So the risk of losing your value for supply shock is very, very low. The last one is very high in Bitcoin. So Bitcoin has a very high risk compared to fiat, not to fiat, to some kinds of fiat, like the prevalent fiats like dollar, euro. The scenario which people will just stop wanting Bitcoin tomorrow, or they will just want it half of it, and so the demand will collapse, is realistic. The scenario in which that will happen to fiat is, let's say, not impossible, but it's more like a black swan. As long as you have legal tender, also, Lindy effect. Dollar was used for centuries, a couple of centuries. So now people will keep using dollar just out of habits for a while. So the Bitcoin is more subject than fiat to demand shock risk, but it's better than fiat at any other metric for a store of value. So I would say it's great store of value. I know personally a lot of people that only store their value in Bitcoin, and not because, I would not feel confident that Bitcoin is a perfect store of value, but I'm quite certain that all the alternatives I have, from stock market to real estate, also I have a lot of challenges in this moment in history. So it's not a matter of how perfect Bitcoin is. It's a matter of how imperfect all your alternatives are. So I don't suggest my clients to go all in Bitcoin, but I may have done it, and I may know many people who have done it, and because everything else sucks. So getting back to the final part of the answer, Bitcoin is already a pretty good store of value comparatively, in my opinion. It's only a medium of exchange in some very niche markets. For example, privacy payment online. Because if you're doing a privacy sensitive payment offline, you just use fiat cash. It's better. It's easier for everybody, just use cash. But if it's privacy sensitive, then it's better to use, it's privacy sensitive and online, then you cannot send cash online. So you must use Bitcoin for privacy, because credit card, PayPal, they suck for privacy. So if you have any privacy sensitive purchase online, that's a niche market that is it's today already a good use for Bitcoin. You can think about the dark web markets, but also in the clear net, when there is like sex, adult services, or anything which is embarrassing, or anything which is sensitive, or donating to WikiLeaks or whatever. So online, privacy sensitive. The second category is a huge amount at use distance. So if I have to pay in India, it sucks, because if I have to pay to China, there is like the international sanctions, there is a lot of bureaucracy. If I have to pay to Ukraine, that's hell. So if I have to pay $3, maybe I will use some kind of fintech stuff. But if I have to pay $2 million, Bitcoin is a very good medium of exchange. because it's a safe enough sort of value that the counterparty will store it for a while until they manage to sell it. And it's a very good medium of exchange because it goes cross-border without any kind of weight or cost. So especially now that you have the Lightning Network, Bitcoin can be a good medium of exchange also for micropayments that are either. So let's put it like this: fiat is great for everything that you can already do. Bitcoin is not better at what fiat can buy you. Bitcoin is better at what fiat cannot buy you, which is, for example, privacy online or international transfer of huge amount of wealth and stuff like that.
Sure. So, I mean, obviously, both of us have been educating people for a number of years around, you know, the use cases of Bitcoin. But I mean, just sort of finally, for me, it'd be really great to understand from. Maybe I'll throw this to you first, Lawrence. The use case of, you know, I think potentially we're going to have the US, China, and the EU really sitting down to renegotiate the entire financial infrastructure. There's a lot of countries that aren't going to have a hell of a lot to bring to the table. Do we think there is the possibility that Bitcoin could be an asset that at a sovereign wealth level, countries are using to effectively renegotiate a position, or do we see them actually taking positions in this asset? What are your thoughts around that?
Well, I mean, sovereign wealth funds don't usually, telegraph what they're taking a position in, but there is a lot of speculation that there have been, Russia, a number of Asian countries, the US, through proxies have been accumulating Bitcoin. And I would not find that to be surprising. I think I think there is a general understanding that the existing monetary system needs to go through a fairly significant overhaul. I'm not too sure if everyone really understands what that's going to look like when, at the end of the day. But, I would say sovereign wealth funds, I would say a number of just general institutions, asset management firms, you'll start to see an increase in their interest in taking a position in Bitcoin. And as a consequence of that, you're also starting to see Bitcoin-related derivatives. Now, very quietly, there was an exchange set up in Singapore. I won't say who, but I was speaking with one of their senior executives a few weeks ago. They didn't make a big announcement. It was a spot market for BTC, but their plans were also to to basically list options on Bitcoin as well. Once you start to see those markets develop, then you have the ability to start creating structured products with Bitcoin underlying. And I think that's going to get very interesting. I think that will further accelerate the interest, because now you can sort of, develop different types of models to invest in Bitcoin where you're not necessarily exposed to the naked product, just directional up or down. You can start to invest in it, take advantage of its volatility, let that generate a yield. You get these various types of products with interesting names like knock in, knock out in the structured products world. What it essentially means is it's a far more risk managed investment product that your typical sort of chief investment officer in a large asset management firm would then basically say, well, yeah, this is becoming a little bit more palatable for us. It works more within our risk metrics with how we like to manage our portfolios, and then they'll start to buy more Bitcoin. And I would just see that building over time. I'm quite bullish. I wouldn't necessarily agree with some of the pundits out there who would say it's going to like 50,000 or million or whatever, but I think it will continue to grow and get stronger over time. And I think as blockchain in general becomes more widely adopted and digital securities, start to become more widely issued, then it can be also a medium for being able to, as Giacomo talked about earlier, when he made an investment, he didn't have enough fiat available and he used Bitcoin. It also can be used, it's instant settlement capabilities as well. There are other platforms. Court has done quite a bit in allowing fiat to be actually utilized in an instant settlement capability. There'll be a few different choices in being able to use these different digital settlement currencies out there, be it a Tether or a whole bunch of USD-backed digital currencies or Bitcoin, or maybe in the future something new that comes out, which is also well regarded as a sort of a medium of exchange.
Thoughts around that, Giacomo?
Yeah, I tend to agree with pretty much everything Lawrence said. I think that using Bitcoin as some kind of reserve by sovereign entities, so let's assume governments and central banks, will be challenging because from a game theoretical point of view, you have, in order to simplify a lot, but you can assume that a governmental agency has, or central bank or institution has basically two typical adversaries. One is the other nation states. So there is a competition across nation states in which, for example, Switzerland, where I am now, had interests that were very strongly aligned against the interests of the United States with the bank secrecy. And so the United States forced Switzerland into ending the bank secrecy. So there is a lot of competition. And you can imagine, of course, even the more strong geopolitical competition between China and the US, or between Russia and whatever, China and India, or North Korea and the rest of the world. So there is a lot of competition across nation states. And in this sense, having a hard asset and hard commodity, a hard money like Bitcoin, could be used as a weapon, a financial weapon by some institution if there is a strategy within which to use it. So I assume the possibility that some nation states will use Bitcoin as some kind of reserve in the context of monetary wars against other central banks, against other states. But the governments also have to be aware of their citizens. If the way they make money is by taxing the citizens, by controlling the capital in order for the capital not to escape, and the other more substantial way they make money, especially the welfare state democracies, is by inflating the money and by forcing this inflation over people with legal tender laws and cantillon effect. If that's the revenue, the main revenue, the revenue source for states, they have to be very aware of not to mess it up. And so the difference between Bitcoin, so central banks are using gold as a strategic tool into the monetary wars. So sometimes central banks, they buy gold. They like to do inflation, but they still buy gold, which is hard money, in order to do some kind of games within these competitive scenarios with other states. But gold is reassuring for central banks, because gold is something that you can play with as a government, but normal people cannot really play with too much, because it's easy to confiscate, it's difficult to move across borders, it's difficult to hide. I mean, paper gold can just be confiscated easily, you just call the bank, and physical gold is very difficult to hide and to move. So in a Roosevelt kind of way, if you are a politician or a central banker, it's kind of easy to imagine that you use hard money, gold, for yourself, but that hard money doesn't trickle down to the rest of the economy. And so the rest of your national economy is still dependent on your centrally manipulated fiat money, and you use the hard money internally as a reserve. That's doable. With Bitcoin, it's a little bit trickier, because if you buy Bitcoin as a reserve, that may legitimize some private or commercial investor to do the same if you don't forbid it. And so these private investors now, they are less subject to inflation, because they have an alternative escape to inflation, and they are less subject to censorship and to confiscation and to capital flight control. So if for example, if you are North Korea, Bitcoin is great, because you can finally move money around without United States or other entities blocking you. But if you are North Korea, you don't want the small resistant movement to be able to get donations with Bitcoin from across the world, or to buy weapons with Bitcoin. So there is a balance there. There is like internal fear and external opportunity. For this reason, I think that Bitcoin will be especially interesting for in some way for a private. So imagine you are the dictator of Turkmenistan, or you are Belarus semi-dictator or whatever. That's actually a very interesting use case, because you want to be able to, if a revolution eventually happens, you want to be able to move your money. But since you are in a bad relationship with the superpowers, I mean, Lukashenko is a good relationship with Russia, but let's think Kim Jong-un. So now or Maduro, for example, in South America. Now your bank account will be frozen abroad. So you have to defend your wealth as a dictator. And I think that Bitcoin will be, interestingly, Bitcoin is a tool of freedom from tyranny, but it's also a meta tool of meta freedom of tyranny from higher powers. So it's an interesting theory there. A good example is Venezuelan government. They hate Bitcoin. They confiscated, they arrested people for mining. They arrested people for running Bitcoin businesses. They forbid to use Bitcoin or US dollars, because they want to push the monopoly of the Bolivar, which is a super inflated currency. But they accept Bitcoin as payment for using BTC Pay server for a passport service from abroad. So if you are a Venezuelan citizen and you are abroad and you want to pay for a passport, they will gladly accept Bitcoin for payment. So that's, there is an inconsistency, a natural inconsistency, the natural hypocrisy of power. You don't want your subjects to be free, but you want to be financially free. So there is a conflict there that Bitcoin may very well take advantage of.
Yeah, there's always going to be a use case, at an individual level. As you say, it's the first time in human history it's an asset that you can fully control yourself. But I guess my sort of closing question is, we all understand that, but at a sort of institutional level, what are you guys seeing? Is there concern that a government, Donald Trump, for example, could turn around and just say, "Hey, I've had enough of Bitcoin. No, I want this gone." Where do you think that thinking is at that institutional level? I mean, we're clearly seeing from the Fidelity report that there is huge interest and uptake. Has the horse bolted on that front? I mean, do you think this is out in the wild now? Won't be attempted to be reeled back? I mean, we know that it can't be reeled back to a large degree, if at all. But how do you see that playing out at a sort of superpower governmental level?
Well, I don't think they can shut it down, Sean.
Yeah. That kind of is the whole point, I guess.
Exactly. The Liberty coin they were able to shut down because it wasn't a blockchain solution. It was a centralized servers. I mean, past attempts at digital currencies. You had a switch to throw. Not here. And I do think the horse has bolted in the sense not just because you can't shut it down. I mean, you could still sort of outlaw it, right? You can't shut down black markets either. But, you know, I think, you know, you're starting to see enough adoption. I think there's enough people that have gotten into Bitcoin. I mean, some famous names that have even, you know, in the past talked about it as being useless, but then you hear about they've been accumulating. There may be people that talk negatively about it merely to manipulate the price so that they can acquire it.
Really sure of that.
You know, and I think there's quite a bit of that going on.
Yeah.
But I think, you know, we're at the nascent stage of, you know, a whole new sort of monetary system and infrastructure, much more efficient. You know, a peer-to-peer, ultimately a peer-to-peer network where we're able to eliminate a lot of intermediaries that in the past have proven sometimes to, you know, through systemic risks, literally bring down the entire economy. I think what will eventually happen, and you know, I'm not exactly sure, to tell you the truth. You could use DAOs to create, you know, governance models within, you know, localized economies, and then, you know, you could nest DAOs within a state or a nation, and you could end up with a model where there is regulation. I still believe that you need to have forms of regulation. I still think governments will tax. They will, you know, be able to then redistribute those taxes. They may be taxing digital currencies, and actually it will make the taxation a lot easier, a lot more efficient, and they'll be able to redistribute those funds as they see fit to stimulate their local economies, their national economies. And, you know, I see potentially the ability for governments, instead of having to go through a central bank, which then has to go through the, you know, the national banking network, I mean, to distribute. You know, look at 2008, when they decided, okay, we're going to print a whole bunch of money and we're going to give it to the banks, and they're going to send that out as you know, loans to, you know, small businesses, and, you know, then we're going to help rebuild the economy. Well, did that happen? No. The banks got the money, and then they went and invested it through their proprietary, you know, investment networks, and made an absolute fortune. And left Main Street just standing there with nothing. It was shocking. I want to personally see a world where, you know, on your phone, when you're paying your taxes or maybe any sort of government, you know, service, parking fines, whatever, you know, it goes from your wallet into the government wallet, and it's a direct relationship. And in events like this, where there's a requirement for economic stimulation, the government sending money directly to you into your wallet, not through any other intermediary. If we can get to that sort of environment, I can literally guarantee you it will be a far better system, a far fairer system than what we have today. And, you know, ultimately, the world will be a better place.
So about your initial question, I don't think that many people seems to think is popular enough. It can be legally banned. I think that's not the, or at least in the civilized first world. Historically, that's not the case. Alcohol was pretty popular, and it was ruled outlaw in the entire United States during Prohibition. It's not because it was not popular. It was popular, and maybe too much. And that in the 60s, again in the USA, psychedelics were quite popular. They were banned legally after that. So the fact that many people, famous people, like Bitcoin, that Bitcoin is mainstream, doesn't mean that that it cannot happen, that a political decision makes it illegal altogether. It can happen in theory from, I mean, it's not popularity that prevents it. There are some mitigation, there's some things that prevent it in normal times. For example, like if we're talking about the United States, common law is interesting because you have the precedents. And for example, the US Marshal confiscated bitcoins and drugs from dark web markets, and they did sell bitcoin in auctions, and they did not sell drugs in auctions. So they basically, the US Marshal sold bitcoin to the general public in auctions. It's not trivial to rule as illegal something that you are so heavily involved with. It's not impossible though. You can do that. Again, Roosevelt with gold, the US government was selling gold, but you couldn't because it was illegal. So you can do that if you want. The main point, which is also the point that Lawrence made, that you can legally ban Bitcoin, but it doesn't mean that you can prevent it from working effectively in the economy. You cannot shut down the black market. That's the definition of a black market. And there was never a regime powerful enough to avoid the creation of the natural balance of the creation of a black market. There is black market in Venezuela, there is black market in North Korea, there is black market everywhere. There was black market in Nazi Germany, there was black market in the Soviet Russia. There always is black market. And when you ban some, and usually that black market operated in illegal money, because if you go in a Russian black market, you mostly, back then, you mostly trade in US dollars, not in rubles. And if you go in a black market in Venezuela, you probably trade mostly US dollars and not in bolivars. So the black market are regularly using black money, black market money. So you can ban Bitcoin, but the whole point is that, as Lawrence said, you cannot shut it down because it's not centralized, and you cannot shut down the markets that will take advantage on using it because they are, by definition, black market. So, I mean, the prohibition made alcohol illegal in the United States. It didn't make alcohol disappear or become any cheaper. Actually, the price of alcohol during the prohibition was higher because you have a premium, a risk premium into trading it. So, of course, you have to take into account risks if you store alcohol during the prohibition, but it is not a bad store of value. You just have a higher confiscation risk comparatively, but you also have now more a demand premium because there is a risk to price in. So it's more complicated than that, and you cannot ban it. What governments could try to do if they change. So right now we are in what Eric Bosch will define a honeymoon phase. So there is a powerful weapon which can be used against government control, and government don't really seem to be very much pissed off. That's something similar to what happened for the internet. So if you think about that, during the 90s, the internet spread around, and the governments didn't really see that as a threat, especially in the Western governments. So there was the privatization, the commercialization of the internet in 1995. There was the dot-com bubble growing and busting. There was everything. Now they start to, I mean, they want to censor things that go, I mean, there was China, and China created the Great Firewall, and they eliminated every reference to Tiananmen Square. And then there was Arab Springs, and so the Turkey government tried to shut down Twitter, and now the U.S. government want to control internet from fake news and stuff like that. And now you have a internal political inside the big tech companies that are censoring opinion. So now the government wants to. The government in America is conservative right now, and social networks are liberal as a political bias. So you have a fight. So it's complicated. But the point is that you can have a technology that is not seen as a threat for a long time, and then when it's big enough to become a threat, it's too late to completely stop it, because even if they tried, you can still navigate the real internet in China. It's difficult, it's risky, but you can. They cannot really stop the internet. It's theoretically possible, but it's practically very, very difficult to stop the internet outside like a global war scenario. Same goes for Bitcoin. When right now we are like in the 95, Bitcoin is going mainstream, and the governments are like Trump and Munchin and you know the other guys. They are releasing statements against Bitcoin, but they don't really care that much. They don't think it's a threat yet. They don't even think it will be a threat because they cannot really. The single individual inside an institution can be smart, but the institution itself cannot assume existential threat. So if you are a guy working in Kodak, maybe you understand the digital picture will destroy Kodak, but you individually can understand it, but the company will never understand it as a whole, because the survival of the company depends on the cultural blindness, on the scenarios that make the company completely obsolete. So if you are a guy in the government and you understand Bitcoin, maybe you buy Bitcoin, but you will never create, you will never take the risk to create a public policy against Bitcoin until it is an obvious trade. So government people, politicians and bureaucrats, they never do long-term bets. They only do short-term bets because they have to be re-elected now. They have to get their money now. So with their private money, maybe they invest in Bitcoin. But with the public face, they always need to be mainstream and never controversial. So to get back to what I'm saying, it's politically possible that we have the end of the honeymoon phase, but usually the end of the honeymoon phase can arrive in a moment in which the technology is strong enough to make it basically impossible to realistically shut down. And then there is the other argument that we were making before, that is basically a multiplayer competition across different governments. So if you ban Bitcoin, but then China becomes a Bitcoin paradise, then you have a competition problem. So you have to be very, I mean, prohibition was not so interesting from a geopolitical point of view. It's not that you ban alcohol in the United States and now some other country becomes a superpower because they trade alcohol. I mean, alcohol is important, is a huge market, but it's not that important. If you do the same with some kind of hard money, well, that can have geopolitical consequences in which you don't want to advantage your competitor by banning something. So it's more complex than that. I personally think that we should always consider the complete ban of Bitcoin as a realistic scenario and plan the technology accordingly to be resistant and resilient, even if it's just like a hypothetical scenario. You still have to plan for that. So we should keep the blockchain small.
Giacomo, let me just jump in at this point, and this is sort of the one thing that's fascinated me lately. It's almost like that kind of is happening internally at the moment when we talk in terms of the coin joins, the mixing. So obviously we're seeing sophistication around the derivative products being built around Bitcoin. So for example, BlockFi, I saw a couple of months ago, were rejecting deposits of tainted Bitcoin. This to me sort of seems like it's kind of the big threat to Bitcoin at the moment, without any real sort of direct legislation, even within these sort of Bitcoin companies, where they were saying, we won't accept that coin, it's been through a mixer. How much of a threat is this to what's going on at the moment?
I think the long term is not.
I mean, could we have different Bitcoins? Could there be? I mean, you've got guys like Matt Odell, for example, who are saying, well, all Bitcoin should be tainted. Sort of. Well, I think I know your view on this one, but maybe you want to comment on that.
No, so I think that in long term, this is not a real huge problem for two reasons. The first reason is that even if you had that kind of market, so you had the white Bitcoin and the black Bitcoin, and the black Bitcoin is not whitelisted, not coming from a reputable source, and the other ones are just whitelisted. So if you have this kind of division, you have the problem that the whole point of, I mean, the main point of Bitcoin as a confiscation resistant money, as censorship resistant money. So you have two use cases of Bitcoin. You have the direct use case, which is fighting censorship, fighting inflation, fighting confiscation. And then you have the derivative financial use case, which is just investing. But the second use case comes from the first. The reason that Bitcoin is the correlated asset that the Swiss banker may be interested in is because it is unconfiscatable and unprintable, and that's why it becomes a politically independent asset. So the point is that you cannot, by definition, use white Bitcoin as in the black market, because then you will taint it. So you can use it in the black market, but you will just taint it. Eventually, everybody who wants to use the white-listed Bitcoin for something which is not already doable perfectly with fiat, they will have to taint it anyway. So if they want to confiscate your wealth, they can just make your, there are some Bitcoin with your name on because they are legit authorized Bitcoin. They just take your name out of it and now they confiscate it, but you can still spend it in the black market. You can still, so the black side of the Bitcoin economy will always be the core economic center of Bitcoin activity by definition. And this strange hybrid is basically pointless, because the best thing you can do with that is either do whatever you can do with fiat, because you will have to follow. I mean, the reason that moving money from Australia to Argentina costs a lot of money with, for example, a transfer wire, is not that there is a physical cost in this digital transfer. There is a compliance cost, because there is KYC, AML, international settlement, and risk management across correspondence banks and international sanctions. So the costs are political. If you are going to replicate the same cost in whitelisted Bitcoins, you will have the same cost. So you will be allowed to choose between sending KYC Bitcoin from Australia to Argentina with maybe, but basically the same cost of a wire transfer or a SWIFT. Maybe it's a little bit more modern, they can do it more efficient, but basically the costs are legal, they are not technical. So you get back the same, or you give up your white market premium and you enter the black market and you just send Bitcoin. So the first reason I'm not hyper concerned is this. Of course, we should fight, and we will fight, bashing and blaming and shaming if there is an exchange banning CoinJoin, I will write an article saying that this is just like a VPN banning HTTPS. So this is just like a car company banning security belts. This is just a company banning a security best practice. So it's bad, and there is this argument, it's a true argument, so we can fight. But even if we lose the fight, it doesn't really matter for this reason. I mean, the worst of the problem is that my Bitcoin are tainted, so I will give up this white market premium, but whatever, it will not be huge for the reason I explained. The second reason I'm very optimistic long term is that the same technology that you need to scale a time chain based system like Bitcoin need you to stay off chain. So the typical traceability that CoinJoin messes up a little bit is a traceability of very simple on-chain payment in which you put the inputs and somebody puts the output and you do all the same. But you know, this doesn't scale. This cannot scale, because a global consensus system is a system in which everybody must keep records of any transaction of everybody forever. And this cannot scale. The only way you make it scale is if you keep some of the economical activity out of the time chain and you fall back in the time chain only for global settlement. But this, by definition, also increases privacy and messes up with chain analysis. Think about, it's not dependent on Shore for itself, but think about the next evolution of Schnorr aggregate signature. The idea is that instead of putting your signature, and we have a 2 of 2, instead of putting my signature and your signature together, we just sum up our signatures and we put out the sum of the signature. And you can do that inside the same input, and that's already possible with Taproot, which came out next year or something like that. And then there is another step, which is we take all the inputs of a transaction and we sum all the signature, and we only publish the sum of all the signature instead of any individual signature. If you do that, then if you want to send a transaction to Lawrence and you want to spend, you will spend one signature of space, which is important space. But if you, instead of sending your transaction to Lawrence directly, you will join a coin join with me and other 100 people, you will spend just 100th of a signature for space, for blockchain space. So this, right now, if you want to coin join, the reason to coin join is privacy. And that can be seen as suspicious. But eventually, the way Bitcoin is designed, if you want to have scalability and convenience, you will have to do off-chain aggregations. The other example is Lightning. Eventually, when the Bitcoin time chain block space fees will go to, I don't know, $100 in a stable way, you will have to use Lightning for every small payment. And Lightning doesn't allow anybody to trace the time chain by definition. You can still trace the network. I mean, it's not that Lightning is a perfect privacy solution, but it is a privacy. It is.
Giacomo, I'd love to get you back on in the next couple of weeks, because there's so much more to discuss with you, especially around that whole concept of using Bitcoin off the blockchain as much as possible. These layer 2 solutions, etc. Lawrence actually got caught in a discussion with some BSV guys on that very topic.
I think they were referring to me as Bitcoin bro after that, yeah.
Which I found highly amusing. So yeah, I mean, we've been going for a couple of hours here, guys. It'd be great to get you back on to I've got a list of other subjects here I wanted to cover with you, Giacomo. You're an incredibly knowledgeable guy in the space. It'd be wonderful if we could maybe get you back in the coming weeks, if we can pull you away from your Chinzanos sitting around Lake Lugano. One afternoon. Where are you living, by the way? You're in Italy?
I'm in Switzerland, Italian part of Switzerland, so Lugano, and my origin family is still in Italy. So usually I'm in Italy the weekends, and I'm in Switzerland the rest of the
Very nice. So you're very near Lake Como.
Yeah, very.
Oh, it's a great spot. Very nice. Yeah.
Yeah, it is.
My ancestral home. My family are originally from that part of Italy. I think you're a Sicilian, aren't you, Lawrence?
That's correct. We don't like you Northerners.
So the genesis block of our genetics are very close together.
Well, exactly, and I think we're economic migrants, so it's in our DNA to understand that financial systems do break. So we've got a bit of knowledge around that as well.
Very good. Cool. Well, great speaking with you, Giacomo. Very enlightening. It was a very good discussion.
Same, my pleasure. So speak soon.
Yeah, absolutely. Yes. Thanks very much, guys. Well, thank you to.
We should say ciao, shouldn't we? Given our.
We can. It's not cultural appropriation. Arrivederci.
Ciao.
Thanks, guys. Catch you later.
Bye-bye.